What's up, investor? I'm Russ, and I thank you so very much for clicking on this portfolio update video where I'll show you all of the dividend raises that I received in the month of October, the dividends that we were paid, what we sold, what we bought, and then a quick look through of the entire portfolio. Remember, this is not financial advice. I am not a trained CPA. I'm just a guy sharing some videos on YouTube about what I'm doing and learning and my passion for passive income. And things like how I'm getting ready to sell all 100 shares of PepsiCo and 113 shares of Johnson & Johnson to pay for the 2021 VW Atlas that we bought for about $31,000 because, hey, we need a family car that's nice and dependable. So we're going to borrow the money from ourselves that we've stockpiled over the years, and we'll pay it back by buying some stocks that have a greater total return potential than J&J and Pep does, which is one of the things I've learned since starting this in 2018 is that I went really heavy into stocks that were probably best served for somebody in wealth preservation mode, meaning that they are living off the dividends and using those dividends to pay their bills. But someone like me, who's in my 40s, is in wealth accumulation mode. So I should be wanting those companies that are growing and plowing a lot more of their retained earnings into growing the business even bigger and thereby the stock price. Now, that's just my opinion, and I'm not sure where this is going to go, but the things that I do want are to buy high quality investments, and that some of those high quality investments just so happen to pay a dividend. So remember, don't chase yield like I did and buy good quality companies. And on to the dividend raises in the month of October. Lockheed Martin, ticker LMT, raised its dividend 4.8%, which is its 22nd consecutive annual raise, and that increased our PADI, our projected annual dividend income, $6. Agree Realty, ticker ADC, agreed to raise its dividend 1.2%, and that increased our PADI $3.60. And remember, they are a monthly dividend paying company. If you follow the channel, if you watch the live streams, if you get the newsletter, you already know that we decided to park some temporary cash into ticker SWVXX, the Schwab Value Advantage Money Fund, which pretty much buys bonds of governments and corporations all over the world. And because they are affected by interest rates and the Federal Reserve cut rates, SWVX's distribution decreased $62.91. But since that was a temporary holding, I'm not too worried about it. And we're going to roll that money into some other things, as you'll find out. Good old Starbucks, ticker SBUX, raised that dividend 7%, which is their 14th consecutive year of payout growth, and the PADI increased to $12.48. And one of those high total return companies that we're buying, and Ryan Williams calls the gold standard, is Visa, ticker V, which raised its dividend 13%, and it increased our annual income $12.32. And lastly, AbbVie, ticker ABBV, raised that dividend 5.8%, which increased our PADI $9, and that was all good for an annual PADI increase of $43.40 in the month of October. The dividends we received, the first three we start with, are the monthly payers. Realty Income, ticker O, hit us with $52.70 of dividends. Agree Realty, ticker ADC, paid us $25. Main Street Capital, ticker MAIN, $36.75. Swooshin' on in with Nike, ticker NKE, $12.21 of dividends. Can't Stop, Won't Stop, shout out Ian Low, Puck, Vici Properties, ticker VICI, hit us with $89.10 of dividends. The Vanguard Total Stock Market ETF, which is basically a basket, a little sliver of every single publicly traded U.S. company, VTI, paid us $8.71. Medical Cannabis Landlord Innovative Industrial Properties, ticker IIPR, paid us $19. And there's that Schwab Value Money Fund, ticker SWVXX, hit us with $23.99. And now, ladies and gentlemen, the sell portion of the program, ticker SWVXX, the Schwab Value Money Fund, where we sold 2,017 shares shares at that average price where it does stay glued to $1. And as we peel off more shares of SWVXX, what did we buy? Well, we bought 11 shares of Nike, ticker NKE, averaged $79.30. 9 more shares of the Vanguard Total Stock Market ETF, ticker VTI, averaged $283.17. We like VTI over VOO because I want exposure to the small and mid-cap companies. 3 more shares of Visa, ticker V, $283.18. 1 more share of Agree Realty, ticker ADC, $76.10. You can't stop, won't stop Vici Properties, ticker VICI, 15 shares bought at an average cost of $32.49. 7 shares of the Global X MLP and Energy Infrastructure ETF, ticker MLPX, average $56.18, and post 3-for-1 split of the Schwab US Dividend Equity ETF, ticker SCHD, average $28.31. Now you can see the Patty gain loss column. After everything we bought, we had a total of $109.02 added, but because of SWVXX, we lost $100.85, but for the first time in a long while, October was a positive net Patty month of $8.17. Now, we had one covered call that we sold on Nexstar Media Group, ticker NXST. It is a $185 call that expires on November 15th, 2024. And all that means is you have to have 100 shares to be able to sell a covered call. If Nexstar Media Group closes below $185, then I will keep all the shares and nothing will happen. But if it closes over, whoever it was that paid us $450, well, less a little bit of commission, we received $449.33 cash into the account. They'll have the option to buy those shares. Now I want to show you why I picked $185, and I've done this a few times now. That's because there's a strong pattern going on. You don't have to know much, but each one of these Japanese candlesticks represents 1 week's price action. And on the horizontal line, check this out. We're going all the way back to November of 2023. But we see in December some strong support, meaning that the price doesn't really like to go below for an extended period of time, 155, and it hit a secondary support level here around 150. So there's support in the low to mid 150s, and then as you come up, look at the horizontal line right around 185 to 180. In the low 180s, there is resistance, meaning it's having a hard time for whatever reason breaking out past that. So I've been playing the trend, selling covered calls around 185, 182.50 when the price starts coming up, and that's exactly what I did now, where it was at around $182 when I sold the 185. Figured it might pop up a little bit, but it's going to have some trouble, and sure enough, we're down around 177 a share to close out the week. I got 2 more weeks to go on that, and you can see my 185 call right there is currently trading 2 days later for $260, meaning that we have a paper gain of $189, which is about a 42% gain in just 2 days. But I have a strong suspicion that Nexstar is probably going to dip into the 160s, and that contract will get even cheaper. I might be able to buy it back for under $100. So with dividends received and some option income, we had about $716.79 of income come our way in the month of October. Now, you would not be surprised by any of these buys, and you would have been in the know immediately if you followed me on Blossom, where I share my portfolio. It's hooked to my brokerage account, so anytime I make a portfolio move, you'll get a notification if you follow me and toggle on trades. And oh hey, did I mention that also Ian Lopic, Ryan Williams, Mike the Dividend Guy, and Brandon Beavis, my man in Vancouver, are all on Blossom, which is the growing social media platform I'm falling in love with, and it's got a really nice beat you can dance to. And as always, in the description below, I have a link for that Blossom and for the fantabulous and free weekly newsletter, where I share all the portfolio activity from the week that was, plus a few thoughts on personal finance, investing, and dividends. All the cards you've seen are from simplysafedividends.com. Some say it's a little bit expensive, but I think it's quality, it's the tippy top, and you get what you pay for. But the cool thing about Simply Safe Dividends, you can try it out for free free for 2 weeks without a credit card required. I'm not an affiliate, I'm just a happy paying customer. Now take a quick looky-loo into the portfolio. The yield on cost, 4.27%, where the actual dividend yield on those stocks we hold is 3.53%. So you can see what holding for a while does. It gives you a bigger yield on cost when companies keep raising that dividend. This is a little small, but if you want to, you can zoom in and get whatever information you want from this. While I can't share a link so you can see this, you can follow me on Blossom and see my portfolio there. So why don't we sort this by percent of portfolio, and there we go. We'll start at the tippy top. Nexstar Media with 115 shares, good for 11.4%. We have those 113 shares of J&J that we will eventually be selling. We're up 7.4%. Now that is not total return with dividends factored in. And PepsiCo, 100 shares, average price $150, so we're up 10% on those. After the split, we have 500 shares of SCHD, up 14%. Visa, 45 shares. We're working our way. We'll eventually get to 100. 7.8% is what we are up, and it's 7.3% of our overall combined portfolios here. And do remember that I do have a significant portion of our net worth in mutual funds with our work in the 401k. So this is something I share on the channel and have been building for everyone to see. 200 shares of Realty Income, 405 shares of Ares Capital. Our non-dividend paying stock that I have high conviction in ran up a lot faster than I was comfortable with, so I'm actually happy to see Harrow Incorporated pulled down. But at one point we were up over 225%. It got a little ahead of itself, so I'd like to see some consolidation here in the high 30s and low 40s, where I may actually add some more and eventually get to 200. Starbucks, we're up 30% on 78 shares. Kind of disappointed. I really thought I was going to be able to get 100 shares somewhere in the high 70s, where our cost basis is $76.43. 150 shares of Main Street Capital, where we're up 35%. 240 shares of Vici Properties. I buy about 5 shares a week, so we're constantly adding to them. Really a big fan of them. 101 shares of Agree Realty, which is one I would love to get to 200 shares, but I think it is a little bit overvalued, even though it says reasonably valued according to Simply Safe Dividends. 10 shares of Lockheed Martin, up 61%. We were a lot more before they took that dive after their earnings. 19 shares of VTI, which were up 0.9% on. 25 shares of AbbVie. We've owned them since 2019. We're up 135%. Woo! 44 shares of ExxonMobil. We've owned those guys forever too. Haven't really added much, up 155%. Nike, as you know, we've been buying them. 51 shares. I will get to 100, and I would prefer to do it in the 70s. So hey, hopefully they'll stay down there. 10 shares of McDonald's. We're up 66% on. 45 shares MLPX. 15 shares of Chevron, down to 2,006 shares of SWVXX. We've been reinvesting dividends, so that's why it's got the odd number, but we'll eventually be out of those. And 10 shares of Innovative Industrial Properties, which, hey, now we're only down 25%. And we have about 1,600 in cash, not including the 2,000 of SWVXX. Hey, if you like this video, give it a thumbs up. Consider subscribing to the channel. What are some of your favorite stocks you'd like to share with the community? Let us know in the comments below. And hey, in this floating little box next to my head, I made a video just for you about 7 AI-resistant dividend growth stocks. It was fun to put together. I hope you'll click on it, enjoy it, and if you do click on that floating little box next to my head, I'll tell you all about them there.